Okay, welcome everyone. Let's full start our lesson one. Today lesson will go through LO1, learning outcome one. Before starting this, we'll go through the unit specification, our display, and we'll discuss, what we're supposed to do. If you have any question, please, those are listening this recording, please drop an email on email anjum@ukversity.co.uk, and I'll try my best to get back to you as soon as possible. Today lesson key focus will be on business taxation, and we'll go through LO1, learning outcome one. A couple of you we delivered previous unit, which was personal tax and UK taxation. So it's quite, some elements of overlap as well, which we will go through in a minute. Okay, hope you can hear me. Okay, guys, so please follow our Moodle page. We have all the resources available on our Moodle page. So please, if you have any questions, feel free to drop me email, and I'll try my best to get back to you as soon as possible. So today lesson, we'll discuss about the unit specification first and what we're supposed to learn next few weeks. Okay, so the aim of this unit really is to develop our individual understanding about the taxation, especially small medium enterprise. Will go through the basic tax calculation, and our first learning outcome be able to calculate the tax for the self-employed and complete the self-assessment tax return. So which we can add, self-assessment tax return, explain the nature and the purpose of assessment, determine the tax rate amount, calculate, tax payable to the given scenario, self assessment, which will go through the return, and assessment ethical issues. That's, we following our 5 professional code of ethics really will go through. Okay, overall our discussion will meet the assessment criteria. If you want to be look around, explain how to determine the tax status of the workers and evaluate the obligation system of the tax imposed and implication if we don't follow the tax, so what penalties will be. So please, we've been given the indicative content, expenses, allowable expenses, those we can, basis of assessment, deduction from employment, properties, rent, room, number of these issues can be. So because this is not exam based course, this is only assignment based. So please, we need to pick the example which we can, and overall our discussions will cover all the key points, in lesson one. Our few lessons will carry on overlap, so which will go through some element in the following lessons as well, which is quite relevant to lesson one. Okay, let's full start, please. Okay. As we discussed, our LO1, which is be able to calculate the tax for the self-employed. Each lesson will go through one LO and the indicative content, which is already given. So that's, which we need to follow. Okay, so let's please, always good to be reflect, how much we know the business taxation. And please follow the rate of whichever year you want, especially 23, 24 Finance Act. So which we can follow, not major changes in 20. Some changes going to be happen soon, from 1st of April, which we'll go through more in detail afterward. Okay, basic tax rate we've been given from, if you're earning £12,570 is the personal allowance. If you earn more than that is a 20%. Dividend rate is the 8.75. Higher rates and the additional rates, so these are the rates really we need to keep in mind. look around the saving nil band. If you're a basic taxpayer, if you're a higher taxpayer, is a 5. We need to look around transferable amount, which can be 1260, where you can adjust, amount if you have earned more than that. So we need to be look around less than 60. Yes, resident status, we need to be look around. That is quite crucial, which is part of the assessment. Automatically resident if you're living 183 days. If you're living abroad 183, so you can be automatically to become unresident as well. The benefit and the number of things can be linked together. So we have to follow these. Okay, child benefit, income tax changes, which we need to. Property income is 100% property income. Finance costs are the subject to the basic, restrictions, which we need to be look around. And car benefit, if you have, these, you have to look around the car engine size, electrical range of the cars. We need to be look around the mileage, the car fuels, please, the benefit, company van, if you have pension schemes, authorized mileage, that's we need to be look around. Capital allowance, motor vehicle, motor car emissions level, annual investment allowance, please, that's quite crucial. Corporation tax is 19%, marginal relief, which we can look around. A profit threshold, that we can look around. And we can look around the marginal relief and value added tax, the VAT to registered and unregistered yourself. That's what we need to be look around. Inherent tax relief can be for individual. Capital gain tax, that can be on the properties, which we need to be, and of course class 1 NI contribution. And we need to look around the taxpayer behaviors, errors, and deliberately concealed, so that can be a fine, and the purpose of the tax. So tax, and the UK tax system, two types of the taxes, direct and indirect taxes, which we need to be. Professional and ethical framework, we need to be make sure 5 professional code of ethics, which is PPCI. Always remember the word. Popular people chat in office. 5 code of ethics, which we carry on following. First thing is the professional behaviors. Second, we need to be look around the professional competency. You care, mean up to date knowledge. So we have to do CPD, confidentiality. We need to make sure integrity. We need to make sure the client information, and we tell the things true and fair, and objectivity, not conflicting conflict of interest. So these are the 5 professional code of ethics. Those we need to make sure we follow them accordingly. Okay, that's which we need to be look around. Okay, dealing with the HMRC, we can the source, we can call them, we can approach them, and all, and the sources of the tax, and that's we need to look around. Okay, so please, we need to make sure self-assessment is the revenue and the custom to collect, and usually deduct automatically from the wages and the previously. And if you're earning more than 50,000, you can do self-assessment according to HMRC rules, which we can follow. That's quite crucial, which we need to look around. Okay, so please, here on HMRC page, full guidance, carry on following, and we can fill the form as well. I can give you the separate form, which we can do for the self-assessment. Download SA 100 return form, and you can ask, the form for. Now we can making the text more digital, and we can do online if you want to as well. Individuals, of course, we as member in practice normally use the software, and various sort of software can be used for tax return purposes, to submit like Sage or various others. QuickBook, depends, whichever is meeting your needs as a business. So that's we can include, please, in our assessment the form. Okay, so when we do, please always good to be keep in mind we are doing explain the nature and the purpose of the self-assessment. The self-assessment is and the custom is to collect, income tax is usually deducted automatically from the wages pay as you earn. But self-employed people, the businesses or others, they have to report their income accordingly to HMRC, as I shown you the link as well. You can use it. So sole traders and the partnership income from the business trading profit or other incomes, we can do income tax. And the gain on the disposal of the asset, we do the capital gain taxes. These, can be, and the year end is normally 6th April to 5th April. That's, which we need to. And please, this is whichever year for finance sector you use, you need to be make sure follow accordingly. So I shown you as Finance Act 2024, which can be followed for this assessment. Okay, so we can look around company tax rates set in the financial years period 1st April to 31st March. UK taxation money raised, by states in the general public, legislation passed in the Parliament, HMRC control and administer the UK tax laws, and the basic rules are contained in the various, statute in the law, amended and added, annual finance act and legislation which we need to be interpreted, statutory instrument, case laws, and extra concessions in a HMRC statement. So that's we need to be look around. Okay, those is quite crucial elements to tax planning is the legal use of the tax, to minimize the tax, of course, the expenses and the relief or the personal allowance or transferred saving to investment on partner's name if the allowance which we can transfer as well. So tax avoidance is the legal use of the tax legislation but not following intent to the law and use unintended loopholes. Tax avoidance, which is illegal, pay less, tax by concealing income. That's we not supposed to. Okay, next please. We've been given here return and the form which you can for the self-assessment. I'll give you state, the link is please that can be used. And please you can set up the ID and you can do the self-assessment for yourself. For this assessment purposes, please we can use form, we can fill it and we can attach as well, which we look, in the following lessons as well. I'll carry on demonstrating. So it's quite crucial, which we can follow the guidance. Okay. As we mentioned earlier, next we looking when we do the tax returns, a record and the payments, we look around the employed in a 1 year, self-employed, which we can look around property income, we can look around the various other incomes. So we need to be make sure we'll include all national insurance due dates and all we need to keep in mind. Keep the record. If the losses can be carried forward up to 5 years, that's which we need to be make sure late submission is cost, and can be fine. So which we just go through. Okay, let's please hope you can see all. I'll try to be include more example in the next lesson for you as well and give you the booklet. Okay, so we've been given little scenario here. The data field, the date of the income tax return. This is we can say 2023 24 24 25 if you want, so include the example, select the correct answers of the 4 questions. The payment on account will be calculated as, and the income tax payable and will be due on which date that was, and that's which we can look around in a minute and explain the charges and things, so which we go through. Okay, so that's we have here is example. As we will go through the example. So Jemmy paid income tax for 12,000 for 2019. Now we have 12,570 for this year, and his tax payable was 16,000. So Jemmy's payment on account and will due on insert the date, and then the balance payment which we can will be, and we can look around due. That's which we can fill. Okay, let's go back to the next, please, and we'll pick the before what date the must be taxpayer journalist submit the tax return is we can look around the 31st January of the following year. We can submit up to that point on which the dates are the payment on account due, which we yes, so that's which we'll look in 1 minute, and we'll go through these are some examples we added, so please it's good to look around. And so all answers we have on the next page here. According to this example, the 31st January, the payment on account will be calculated as 50%. The income tax is payable 2019, 31st January, and £100 penalties if you don't do the return on the 31st January. So that's which we need to look around, and then so please thus we need to be look around the payment. A 5% penalty paid late, which can be. Okay, move to the next. Okay, so please you need to be look around 31st January, the date, payment and options you can pick. Let's look the full examples now. Hope you can see the slides properly. Please, if anyone any question you can ask, please. Okay, so determine the taxable amount, calculated the tax payable given scenario. We can look around the activity 2, payment and account and the balancing payments. We can look around the income tax liability, 7,000 paid through PAY, which is 4,000. Capital gain tax is 5,000, and the income tax liability 8,000. And the PAY tax deducted since the implied and the capital gain. So we can look around this and we can go through the next. Okay, calculate the self-assessment return from the data. So we can pick around yes. So income tax for payable period 7,000 minus 4,000 paid through, so 1,000 is outstanding. The payment on account was yes until that point. So you have to look around the period and you have to segment and the period accordingly. If it's the middle of the year you start the business and things, so you can proportion as well the final payment, which we can look around the income tax liability less pay and then less the payment on account if you already done it 3,000. So thus you will see there the looking the capital gain is, and then final payment we can make to the dates. So we can even make the arrangement. If we make the late payments, it's apply the basic rates, and the interest will be incurred. That's really we need to be look around. Okay, so that's we included some examples for you. Please, we can look around. Okay. Yes, please. If your initial penalty is £100, £10 per day, maximum 90 days, 5% tax due, minimum 300, and that's the fines can be. Okay, so we can look around. Careless is 30%. Deliberately or not concealed 70%. Deliberately and concealed can be 100%. That's we need to be look around in the light. Yes, returns. Okay, so make sure you keep the record, please. if we don't keep or failure to keep the record, that can be fine. So payment on account must be made on the 31st January in the tax year, and on the 31st July, the final payment of the income tax must be paid 31st January of the following year. So payment on account 50% of the prior tax year's liability less the tax suffered at source. We can look around the payment are not required the prior year's income tax payable falls is 1,000 more than 80% prior year liability met the source. So we can look around these, the rules as well. Payment on accounts can be, and the NI or the penalty, yes, 5% of unpaid tax, 10% if more than 5 months, or 15% of the unpaid tax. So that's we need to be look around. Okay, next we need to be look around to assess the ethical issues arising, the factor, the considering which we need to be subject matter if the asset or you purchase is not, the personal in or the investment use, but stock and the inventory indicates, the trades. Behalf of we have to look around the ownership indicators. We have to look around the following frequent transaction, more likely the trade being conducted. We need to look around the supplementary work, improvement of advertising, asset bought and enhance them to sold, the indicator of the fair. And if you force, to sell because of the cash flow crisis are less likely to be disposed of at the pressure, the profit and the motive. So we can use the words, this, we have to look around the subject, ownership, frequency, improvement, reason for sale, our objective, adjustment of the profit pro forma, net profit per account, disallowable expenses like depreciation for suppose you have to add it back, income not included and the taxable as the trading income, less the income included but not taxable as the trading income expense, not but allowable. So we have to look around the capital allowance then, and we have a trading profit. So disallowable expenses, please we have to accept, which we need to be look around each category of. So any private expenses incurred by the owner is disallowed, or they may be estimated the percentage agreeing with the HMRC private use. Imply the salaries, proprietors drawing salaries are appropriate, the fund equivalent to dividend in the company disallowed and must be added back. And the sole trader own income tax and the class 2 and 4 disallowed and implies, the salaries and NI. So we have to look around the general provision. Unincorporated business are not bound by the Company Act, and general provision, especially the bad the impaired irrecoverable bad acts may be therefore provided in account, and more general provision must be adjusted, increase in the general provision which we can, and the item not included in account, and income not included in the taxable good taken by owner for their personal use. We have to keep in mind, have made the profit for the sold of the goods. We have to look around those. Okay, then we have to look around, would have the made the profit for the goods were not sold to be third party. We have to look around the profit would have been made, need to be taxed or drawing already been accounted for at the profit elements, and drawing has not been accounted for add full, the selling value of and taking for personal use. So expenses not included in the account but allowable like a business expenses paid privately, therefore deduct, adjustment of the profit which you can home at the office, so that can be used. Okay, so capital allowance, so the differences to the company's computation private use of assets. So your asset use, for the personal use, separate column of each asset required and the capital allowance calculate normally and deduct. So we need to be nowadays, of course, guys, we are using software and that's easier, which we can, and that's software carry on written down allowance CA2. That's we need to be look around under each is the main pool or asset, which pools market value, dispose, original cost. So that's we need to be look around, which we also use these, sort of in our ATHE exam or any other exam as well. Maximum annual investment amount, written down allowance. That's also good to be keep in mind when you calculate the taxation and not split into the two period. And the trading, allowance, which we need to be look around. £1,000 is available for to the sole trader only, and the sole trader trading income is no more than 1,000 is exempt and does not need to be declared even if the sole trader trading income is less than 1,000, but the expenses are higher than. Can we choose to claim the trading allowance in order to get relief for trading loss? So if the trading loss, trading income exceeds the 1,000, then can be deducted from the trading allowance rather than the actual expense. Okay, so we can look around the income tax return. The taxpayer have to complete the main tax return, supplement pages. Yes, those are quite crucial in real assessment. Of course, you're not doing real assessment. You're looking uh, in this assignment. That's the form. Please, we can fill it. That can be included in our, and that's is quite crucial, which is for assessment, which we can. Yes, so you have to look around the is it UK resident, non-resident, determine the resident, follow test, automatically resident. So you have 183 domicile, born in the UK. Yes, so these all the points, under we need to be keep in mind when we calculating our condition. Individual was born in the UK, individual UK domicile, and the individual UK resident. And we need to be look around the individual UK resident for last 15 to 20 tax years immediately preceding of the current tax. So 1D, please, we can look around the taxable or exempt income. We can discuss here, and then we can add example for the distinction criteria. Exempt income can be, you don't need to be for the tax purposes, income from individual saving account, gambling, premium bonds, national saving investment, and we can look on as you earn, share save accounts, and statutory redundancies, that's not no interest. Uh, Damages received on injuries, grossing up, sum of income, receive net, income tax, salaries, interest on unquoted, the company's loan notes, or other income. So these we need to be make sure. So this is the pro forma we'll carry on using for the taxes: trading income, employment income, pension income, property income, interest received, interest net. So because if the tax is being deducted, we can make it gross, and the dividend, and then we can minus from less relief, net income, and personal allowance, which we can 12,570. So we can include, please. So non-saving income, we can look around the rate, uh, and on saving income, dividend income, and tax, and we can calculate the tax liability. So please, that's which we can, and we fill the form in the next lesson, which we'll go through further. Okay, thanks for attending today, and the next lesson we'll go through our LO2. Have a lovely weekend. Hope speak you all during our next lesson. Thank you. Bye bye.